Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording here on Friday, April 12th, after the markets close. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing pretty good. I'm done with travels. I'm back home, so ready to go.
And the market is moving. It was a nice week in
hmm
plenty of markets. We're gonna dive right into it. Today I'll be covering on the commodity side, I'll be covering soybeans, coffee, and silver. And Barry, as he does every week, will be covering ES, bonds, gold, copper, crude oil, the dollar, and the euro. So there's a lot to go over, a lot of moving parts. So let's dive right in with the E-mini. And we're seeing on your daily here, we're seeing a market that cover the name up. It looks like it's rolling over.
Sure does.
Yeah.
And it's no surprise. We've been on this for a while now.
hmm
And I think last week we left off with, we had 53.10 to the upside and we had
5,200.
5,200 to the downside. And the whole thing was how we're going to manage 5,200, right? If we're going to hold above it, or if we can, if we're going to rally, we're going to get on top of 53.10. Otherwise, we had this big block we were watching to see which way it's going to weigh in, and it looks like we're pushing down. Sellers are stepping up.
Yep.
If you guys haven't seen our other episodes, I would say to go back and look at the last, I don't know, 3 or 4, because we talked about how this high was coming in, how it was setting up, and in one of them we even spent about 15-20 minutes talking about looking at the weekly and looking at the S&P in a bunch of different angles. And so that's before it happens. And while it's happening, we're waiting for signs, which we covered in the last 2, I think.
hmm
And once it's actually moving down, rolling over, like, there isn't a whole lot to say other than just to trade it. So this week it's really about looking at how everything's set up. If you guys remember, we talked at, when the highs came in, we were looking for some kind of a false break, which we got in spades. We were also looking for a potential lower high, which we
Which we
also
got.
got. We
Yep.
also got actually a few lower highs.
hmm
And now it's lower highs, lower lows. Looks like we're trending lower. So on the futures, I had, on the 30-minute chart that we use, I had 51.62. Let me pull that chart up. I had 51.62 as major support. And below that, we're coming down to really 51.20 to 5100 is really the next sort of, major area of support. So we'll see how that plays out. But for now, it's 51.62 we really want to watch when the market opens on Sunday. It's really, it's funny, we recovered that by the close, 51.66, not by a whole lot. We definitely dipped below it by a lot. So let's watch how that works out. This is good support. Now, if we get stuck under this somehow, and sort of like how we did up here and how we did under 52.86 right there, if that happens, then 5104, 5100 is really the next target, and 5120 is on the way. It's a square of 90 from the lows that we're tracking it. So that's kind of where we're at. I think 5162 area is really the one to watch for next week. Let me get back on the daily. 5200 goes without saying. It's also right there, and that's basis the daily. So if we somehow get above 5162 and then can recover 5200, I would say we're back in the jam again. We're back in the consolidation mode, with the potential to possibly test the highs again. But if we can't do that, we try 5200 and we fail and whatnot, maybe a couple of inside days or one inside day, and we start to weaken around 5200, then I think 5100 is just, stone's throw away, not too far away. So that's kind of how I'm looking at this. If you look at the cash, this is exactly where, when we call the high to come in, this square 144, we talked about Gann's master square and whatnot. And you can see how, we got stuck under that. We just couldn't get above that square 144 and eventually sold off. So based on that, I mean, a correction even down to 49.71 basis the cash. Let's say 49.69 would be sort of a normal correction.
Mm-hmm.
That wouldn't be out of the ordinary. But if we go that far, that's also signaling that we might be having more downside.
Mm-hmm.
So let's watch it. Right now, we're only down a quarter of a square. Around 51.14 is where that comes in. And we're holding above that. So it's, once you get into a quarter of a square, you really want to see, is that sort of a normal correction, or are we going to go down to the half, right? So
Mm-hmm.
in order to make that call, we have to see how it behaves around the quarter. Just saying.
And we're there now.
Yeah, we're there now. And speaking of there now, Dow is
Look at the
exactly
Dow. Yep.
exactly at the square of 90.
This is a big, big moment here for the Dow.
It's a big moment. It went up to 120. It looks like it's doing it in the 60s and 30s. So if we hold above that, that would be a fairly normal correction.
Mm-hmm.
And we'll have to see how the rest of the pattern unfolds. Now, if we get caught below that 90, that's going to be really sort of dangerous. That would signal a lot more downside.
Yep.
In the coming days. So this 90 is really interesting because that 90 is coming off the low from last October.
Mm-hmm.
But you can see how, we squared out here, it's 90 by 45.
Mm-hmm.
And we really didn't, we went down maybe a quarter of a square at most, but we hung around there basically. And now, that becomes support. You can see that there. So it's really, it's just not the square now. Now we have some pricing behind it to support that. So we'll have to watch, I'll be watching the Dow and see how it behaves in there. So along the same notes, if we break through that somehow and get stuck below this, that's just really bad.
It's bearish. Yep. If it does that.
Yeah, that's really bearish.
Mm-hmm.
And so it's all good. It looks pretty good. Any warning signs? Well, the only warning would be, we're down quarter of a square here. On the Dow, we're sitting on top of the 90. And that's why we want to kind of pay attention to that, see if we hold above it, somehow consolidate above, or if we're going to somehow slip through and hold below like we were doing here. And that's only because Dow had like that bigger move. S&P, kind of the same story, 51.62. We talked about that. We were just a few points above that. 5,200. If we can get above that, then the story is going to hold for a bit. If we can't get above 5,200 and we consolidate below that, it's still not very positive. Actually, it's kind of negative. So, so that would show us that there's more downside. To the downside, I told you guys 5,100 is sort of where the next is 5,104. The next support is right there. And if we, for some reason, take it out, then I think 48.50 is really where we're going, which is kind of where the Dow, that's where the Dow is sitting, right? 90 up from the October low. So Dow is sitting right there now. And if we take out 5104, I don't think there's a whole lot of stops in between. Eventually, we're going to have to get to 90, test that out. So that's kind of what I'm seeing on the daily. Do you have anything to add to that?
Just that the weekly low this week on the ES was on the 1x1 from the January low. So it's testing that trend line, the 1x1.
Okay. All right. Speaking of 1x1s, here's a 1x1.
Yeah, that's the exact one I'm talking about. Yep.
And here we tapped it, last week, remember, came back and broke through it today. So, all right, let's take a look at the weekly.
Yeah, look at the weekly. That's where the 1x1 is. Just tapped it.
Weekly looks good. I mean, there's plenty of space to correct if it wants to, and the last correction was fairly good size, 3/4 of a square. So if we do 3/4, we come back to the 81, which is
what's that?
The breakout point.
4,800.
Yeah, 4,800. Yep. There's our there's that level. Now I was also looking at what was squaring out. It looks like it's running a square of 72,144 because of the 81. And I was going to look at some of the other squares. It's always good to double check. I know we've been running with this 81 for a while.
Mm-hmm.
But as we start getting confirmations, it's good to check the other numbers. Look at the 90, see what's happening there, and you can see we did hit a good level.
Yeah, and the 90 would take you below 5,000, and that
Mhm,
looks like in that same area.
right. And if we, square 52 was really meant for the weekly
Mm-hmm.
charts. And if you look at that,
Wow.
we, I would say we squared out, you know,
Yeah,
at
both
least,
at the low and the high. Look at both of them caught it.
yeah, yeah. And we have it at basically a year and a half, that's what the
Mm-hmm.
cycle is.
Mm-hmm.
So, well, the other thing I was looking at, when things are a little bit off like that, you wonder like, where is it exactly? And I remember talking about this low in 22. And sometimes, when things happen very quickly, I call it sort of a ghost low.
Mm-hmm.
And it's there and you want to track it, but you also want to track the low right next to it, which
Yep.
could have been the real deal. And if you
Bingo.
and if you move it there, sure enough, we squared out pretty much on the mark, and
Mm-hmm.
that lines up the A, B, C, D. So everything kind of fell into place. So I would say, I'm going to go ahead and use that going forward just to see how this plays out from there
Mm-hmm.
and leave it on the square 52. So that's that. So that looks squared out. If that's the case, then, this week's high, I mean, not even the high, let's say 52.48 is really that 104 line,
Yep.
So we'll put that there and we'll watch it. Long as we're below that, the weekly's got a lot of pressure and
It-
plenty of room to correct.
It's funny you have that number 52.48. 52.50 is what I have on my daily. There's a
Okay.
there's a half square right there. And as long as we're stuck under it, it's no bueno for bulls.
Mm-hmm. Well, this is a perfect Gartley, right?
Mm-hmm.
I mean, look at this, hit it. So it's a good setup. Let's just say that. So,
Indeed.
so now the job is really to be good, with your system and just to trade it. That's really what it is. Um, and you know which direction to trade it. We know where all the levels are. And we also Ben's posting all the time, all the levels for 60-minute daily. And I
Mm-hmm.
post this 30-minute every week, every day.
Mm-hmm.
So you guys can keep up with all the sort of the sub levels based on the 30-minute chart.
And this gets to our conversation at the end of the show last week, which is the mindset has to flip now from buying the dips to selling resistance.
Yeah, we definitely have to do that up until we get to some good support, right?
Correct.
So that's the key. And when it comes to support, you want to put the brakes on a little bit and see what's happening and if it's squared out or not, or
Mm-hmm.
what's going on. So here, 51.62 was one of my points. And we did kind of stall out. We didn't slip right through to 51.20. So, but the fact that we came this far doesn't look exactly positive, right? And
Right.
and as a false break, you would think they would have rallied it, all the way after taking out the low
Mm-hmm.
from on the 11th. So it didn't quite that happen. So we have to kind of wait and see how that plays out. But we know what the number is, if we get stuck below that, any rallies that are below 51.62, you can sell those. And just like we were doing, all the other levels on the way down. I can move
Yes.
on, right? That's enough.
Yeah. No, it's good coverage.
Good. All right. Let's talk about bonds.
And let's before we leave, let's just say one thing definitively. So where are you on the trend now for the E-mini?
Short term, on the downside.
Mm-hmm.
Weekly is starting to turn down, but we haven't had sort of a first counter trend on basis the weekly.
True.
So here you can see we had a high. We have 2 bars down, and we really haven't had any kind of a counter trend. So we can say, this could be like a normal correction. So we have to pay attention to that. Now on the high that we got, here, let me get a crosshair here. So in July, you can see 1, 2, 3 weeks down inside bar. And then we had 1, 2, one inside bar.
2 week, yeah, 2 weeks up,
basically 3 weeks. Yeah.
Mm-hmm.
And then we corrected. I mean, the big trade was then to the downside, right? The biggest trade.
Mm-hmm.
So we haven't had that kind of a counter trend. So up until that happens, we really don't know.
Right.
Technically, we want to wait and see. But this 50% looks, I mean, the other sort of the ridiculous thing is if you, we're just going off this low and the, 50% of the square just happens to be very close to the old high. If you look at, look at
Yep,
that
right there.
right there, right there. I mean, completely not connected. This low is not connected to that in terms of where that square would fall.
Right.
So everything looks good geometrically, and we can pull back down into that level and be just fine.
Sure. Okay, that's good. Let's go to bonds.
Mm-hmm.
There was a lot of action in bonds this week.
Yeah, let's go on to bonds. Yeah, I think, my view is to the short side on the short term, but like if you take a weekly or monthly, we're still straight up. So we have to see how that plays out,
We have to figure out, what the
And
the
I think
price
that's why it's
action
important
tells us.
to stay with the time frame that you are comfortable trading.
Mm-hmm.
And so yeah. All right. Let's move on to bonds. Bonds are easy. So we were looking for, we were talking about a break below that ABCD low would not bounce. And we talked about if it gets taken out, we're going down, and we did.
Mm-hmm.
And then we talked about a test of the 50%. And if it goes, if it goes or not, and we had the test and we got it. And now we're below that level. We might come up a little bit, but this 50% is important. As long as we're below, let's say 16.5 or so, bonds are still in a weak position. And I wouldn't be surprised if we go down to test the old low from last October.
Mm-hmm.
Let's see how that happens. Might be slow, might be fast. So
Look and see put that ABCD on that we're working on, and you can see we get a target lower now. Almost to like the top of your box.
this
1,
high.
2, 3. Yeah.
1, 2,
Start
3.
there. Yeah. Look where it would go down to.
Well, it's
Right to the half square.
right to the half square, and
Mhm.
we got under. So being that we blew through it, it's not good news with the bulls.
No.
So bonds definitely look weaker. And well, longs are below that 16.5. I think that's just how it's going to be.
Mhm.
Let's look at the weekly bonds. Weekly bonds, same story. We
Heading to the 114.
heading to the 114, and if we get there this time around, I mean, we might have the square that we've been talking about, 216,
Mhm.
144, 144 was here. And who would have guessed maybe we'll have a 144 by 216. Kind of, I mean, it's not a proper square because we did take it out, back in October. So if we get to that level, I'm thinking we're probably going to go down and take that out too and end up doing a 180 all the way down.
Mm.
That might be the next, or we might switch to 52 and see what happens. So if you do 52, remember, now I remember that we came down and hit 3 squares down. So if we go and test that, I mean, that would be really the test.
Mm-hmm.
If we take that out versus if we make a higher low here. So let's see what happens on that square. And on the 90, no, not much. It's really between the 72 and the 52.
Mm-hmm.
It's really the 72 because 54 is in there, which is just 2 off from 54, right?
Mm-hmm.
52, 54. So bonds are basically, I wouldn't buy it just yet. Let's keep it at that. Moving. Anything you want to add to bonds? We're good,
No,
right?
I think we're good.
All right. Moving on to crude.
It's getting stuck on this half square, isn't it?
Yeah, it's getting stuck there. And what I did was, I've been running this square from this high all this time since we got that 54 by 54 square.
Right.
And since then we've been running, which is just fine. We got about the 50% of the square. And I just thought it might be time to shift it a little bit and see. We'll continue to check from that. But I wanted to check from here because we've gotten to the 50% of the square. It's really sort of a battle at the line, at the square. It's really about settling above or below. And since we have 83 right under that, I think eventually the push is to the upside.
Mm-hmm.
We're not squaring out. Nothing else crazy is happening here. So 91 looks like the next stop once we consolidate and, build up some value here above 83. So long as we're above 83, it's very bullish. And if we get under that, we'll talk about it then. But for now, it's bullish.
Mm-hmm.
And we've been bullish, since December. We've been talking about the long side, and it worked out just fine.
Yeah, since that square out, we've been very bullish on it.
Right here, right? Yep.
And it's been good trading to the upside. Slow, but good trading.
Yeah, a little sloppy, but hey, it's better than sideways. Right.
Yeah.
So, all right, here's the weekly. It just looks like we're going to go up and test its other high back from September. It just looks like that pattern. So let's wait for it to happen. We made a slightly higher high this week. So the trend is intact. I really don't see a big problem here. Although, did we run? Let me see here.
Not quite.
Not quite. So, I mean, if anything, we could score out in May. We'll see what happens then. Actually, I'll keep it in here. You never know. So there, not much happened. All right, so that's it for the weekly crude. Let's just stay with the trend. Nothing
dramatic.
Nothing dramatic, nothing mysterious yet, anyway. And we'll talk about dramatic.
I think we got some square outs in the metals.
Yeah, leave it to gold, Well, we went up and, we talked about 2368 being that 50% of the square, that being resistance. Of course, we popped right through it and reversed immediately.
Yeah.
And it looks like we're getting close to a high if that is not the high. So not much to add to that. I think if you've been long, I think, count your blessings and maybe take some profits. That's about what I have for gold.
We're also 90 days from the December 13th low.
December 13th. Okay. All right.
Yep. So that's that. We timing wise, we
yeah,
did
we are right there. So
Yep.
this half square to that's half square.
Yep, we did 90. So there's some timing. It's funny, the huge reversal today came when Goldman raised their target to 2,700 and B of A said like 3,000 for gold. And as soon as they came out, they slammed the market down.
Well, let's see. I mean,
it was amazing.
It's funny how it goes with the headlines, but it's not necessarily over yet, because just like we saw in the Dow, we're 90s right there. Even a correction way down into 2186, which seems like miles away now, it's still very bullish.
Yeah.
And this breakout was very pronounced. So, I mean, I think that now the thing is to see how, because we know long-term gold is very bullish. So we're just trying to see, it's not about, is there a new bear market in gold? It's really, when you asked about, hey, are you bullish or bearish here? Which trend are you following?
Right.
Well, let's take a quick look at the weekly. So if you look at the weekly gold, we kind of went vertical, and we did hit 270, which we talked about, and that's where we got that other number.
Yep.
2418, not 18, a little higher. Say 2422 up there.
Yeah, my weekly full square was around 2450, so right in that neighborhood.
So we hit that,
Yep.
But the thing is, we're really far from the 50% of the square, which is around 2000, so 2050. So any kind of, even the biggest correction here, it still holds gold at a very bullish position. Anything above this is very bullish. So it's really about, how is this correction? Is this a normal 1 or 2 week correction, or is it something longer? And the only reason we're being a little cautious is because we did have this full square run from that low back in October of 22. We know with this correction right to covering one full square. And we talked about it back at that low, how we could get to that and it wouldn't be that much of a stretch. And well,
there it is.
A little more than a year, but it took about a year, but almost 2 years. So, but there we are. So I think we're going to look at this as sort of a normal correction, because we just hit resistance for now. And it's I feel like gold has more to go, at least based on the weekly, because this breakout's, very minor compared to the sideways we did above that,
And the length of time we went sideways.
and the length of time, exactly. So this,
Mhm.
if anything, we broke out, it's going to come back for a retest and then move higher. So we're
Mhm.
watching for that. I think that's a good way to look at gold.
Yep.
And if we can hold, since we got to almost 3/4, I think anything above 2280, 2279 is extremely bullish for gold.
I've got
Not-
monthly full square support around 2300, so anywhere in there is good.
yeah, yeah. That's 120, 120 degrees. Yeah, that's perfect.
Mm-hmm.
So that's it for gold. Not much other than that,
It's good.
it's following, so far all these markets are doing exactly what we've been thinking. And that's why there isn't a whole lot to say, like when things aren't clear, that's when all the work has to go in. But when things are just moving, it's like we always say, it's less work.
Or as you always say, trade it.
Trade it, and less research, right? Because we've done
Right.
all the work. And here we have another metal that we've been talking about and we've been bullish about, no matter what the news was at the time, all through here. Well, I think the sort of deep look we took was this consolidation. When we looked for breakout, we got the breakout, came back right to the top of the box, and we started moving. So we're in that leg, and we were talking about getting up into 455, and looks like we're pretty much on target. So let's see. It's in a very strong position. We took out these old highs here, and look at that, right? We took that out too. And it doesn't look like a false break so far because we closed, pretty strongly. We didn't close at the lows of the day. So let's continue to watch that, but it looks good. It looks good in 450, 455 doesn't look like it's too far-fetched. Although it might have looked like that back in the day, right? When we were calling it.
Yeah.
These things. Another market that's going our way, which is copper, right? So anyway,
Yeah.
I mean, back to
Your weekly.
weekly, where we bounced off. It was 364 is where that weekly pullback came in. That was right at the breakout of the, it was breakout of the triangle, came back to retest it and started moving higher. And I don't see a reason for it to stall out now. I think, clearing this high would be good. Once we clear that, I think 180 is, sort of right there. So 176 is where 180 is. I mean, for 476, 477, and we have 455 from the daily. So it's all right up in here.
In that area.
In that area. So, and it looks good. So we'll trade it that way. Not much to add. And let's move on to the dollar.
Which had a good week.
Another good week. Another market we've been bullish on. And well, it's going towards 107.25. What can I say?
Yep.
What more? And, so the last few weeks, it's been about the 50%, can we hold above or below and whatnot. And here we found support, got above the 50% of the square, held above here. And from there, we've been talking about, as long as we're above that, we're looking for it to move higher. And there you go. So 107.25.
Yeah, and that's the essence of a square, using the square, right? You get above the half square, you stay on top of it. Next target becomes the full square.
Yeah.
And it's fairly mechanical. Right.
Very mechanical.
Yeah.
And okay, let's take a look at the weekly. The weekly, speaking of half squares.
Yeah, look at that.
Weekly hit the
decision point.
135. Yeah, let's see. So we hit the 50%. So yeah, I think a pause would be okay and expected here. But the thing to watch is if we somehow break through and get on top of it. So where is the 50%? Let's say 106.15, 106.15, let's say. If we somehow get above that and manage to hold above that, I think, it definitely opens up probably a lot more than 107 and maybe 112 at some point.
112,
not 112 at one point. So so that looks good. The only thing is a weekly hitting the 50% of the square. So be a little bit, watch out for that. See if we back up and fill a little bit. And even then, anything above, let's say 104.75 is very strong. Any pullback above that is strong for the dollar.
Mhm.
And speaking of levels, this is how that 108 pays off, you guys. We've been talking about this for months. Right?
Yes, you have.
And last couple of weeks especially, we were talking about waiting for it to break, and that it's all going to get very weak all of a sudden, and there you go. There's a week all of a sudden. And we talked about last week how the trend is down. Yeah. So
Mhm.
there's that. There's that. And there's a break, and looks like we're going to go and test the October lows. So trade cautiously, but with knowing where your levels are.
And knowing the direction.
Yes. Yep. Mainly.
Mhm.
So weekly, same story. Here's the box. This is where it's going to get weaker. So we got weaker, got below 108. We've had this for months and months and months. So let's just continue to trade it. Looks like we're going to go up and test the 50% of the square, which is right at 104.
Mhm.
See what happens. Well, that's all I got. Yeah, that's pretty much it.
Good review.
Thank you. I'll put it back to you.
Like you said, when you do the work before it starts moving, and then when it moves, you trade it.
You trade it. That's it. Well, Ben, what's happening here? It's a little bit slow in the release.
Yeah, the interesting thing is, though, to me, is once we broke that trend line, we're just banging up against the backside of it.
Mm-hmm.
So it's almost like this is the first push down was here, and now we're just chopping back and forth. So potentially the fast move is coming. Anyway, the first marker would be if we take out these lows, which
Yep.
is around 18,060, and then the full square, which is
Yep.
around 17,900.
That's going to be the big one. Yeah.
That'll really get things rolling on this. And I was looking at something interesting, Barry, from low to high. If you take out the holidays, like there's 4 or 5 holidays in here,
Mm-hmm.
we did a 101, and 101's a
And
good
that's a good
number.
square. That's a good count. Yeah.
That is at 101 is a really good count. So that's the daily. Let's take a look at the weekly, and you can see what we're battling around, why it's a little slow going here.
Mm-hmm.
So that's 1, 2, 3, 4, 5, 6, 7, 8 weeks essentially. We've been banging around this full square.
Right.
Not able to clear it on either side. It's what do I have it at? 18,180.
Mm-hmm.
So, and where did we close? 18,172. So next week, if we can get a full bar under this full square, this 90, that's big.
Yeah. Yeah.
Yeah. Then if you're looking left, you got the half square and those highs at the end of 21, beginning of 22.
Mm-hmm.
That would be next, it would be a quick, 2,000 points. So this is a good visual of why it's a little sloppy here from the start. It's got to get away and get stuck under this full square, this 90 here to really get things going on a weekly basis. On the monthly, we got an inside bar.
Wow, look at that.
But the timing's there, right? This is, from the '09 low, you're talking 180 months. And, we went right up into the 108 price wise. So it's a good square.
Mm-hmm. Mm-hmm.
And now what we're looking at and see is, can we take out the low from last month, which is around, 17,800? Because then that gives us a down bar, and that gives us, the more confidence that, okay, now we've got a down bar. So far, we're just doing an inside bar.
Right.
All in all, though, it's the process that we talked about, right? You identify, which we did in here, and now you see how does price action evolve afterwards. And
Mm-hmm.
it's not a big plunge in V, but we're, rolling over, and now this chop here could be setting up to take out the lows here and really get going.
Right.
So we'll see. Anything else to add here on NQs?
No, not much. That square seems important, and it looks like a bit of distribution, but we'll have to see how that works out.
Let's jump over and take a quick look at Bitcoin.
Mhm.
Bitcoin's still in this triangle, and you can see we're tightening up, and it's all vibrating around this. The mean here looks like it's right here at this half square, which
Yeah.
is around 69,300. We close obviously below that, but this has to break to get some action going.
Hmm.
If we can hold here and break up, the rally can continue. But if we roll over and we break down below this full square, which is around 64,800, that'll mean we're going to correct. We could come all the way down to here. We could come all the way down to here. But right now we're just chopping around in this triangle. So there's not a whole lot to do until we, pick a direction out of this triangle.
Right.
Anything else to add on Bitcoin?
No, let's watch that square, see what happens.
Yeah, that's the key. We'll watch the square. So let's look at the commodities. It was an interesting week in the commodities in that there was a lot of movement. I think the metals all uh, topped short term, not longer term, but short term, as you talked about. Gold and copper. We'll cover silver. The softs, cotton is still pulling back into that congestion zone. But one
Hmm.
of the things I want to look at before we get into it, because this is a perfect textbook example of why we track these longer term triangles and longer term consolidations, because when they go, they really go.
Mm.
And that's cocoa. Let's just take a look at cocoa. This is the cocoa monthly. And so if you look at this is a massive consolidation, right? You could say it was consolidating for 9 years in basically this half square. But if you look back, I mean, basically since 99 or 2000, we've been in this 45-degree square.
Yeah, yeah.
And then look what happens when it finally breaks. Here, when it breaks out of the triangle, which we called out, in real
Hmm.
time, you can go back and check the shows. This was the trade. And then,
No looking back is that.
oh my God. And then we went, we were basically tracking the 2 by 1.
Yeah,
And then we shifted to the 4 by 1,
yeah,
and now it's ramping, and it's coming up on the backside of the 8 by 1.
right.
But the reason we're showing this, and I want to show it, is this is why when it's consolidating, yes, it's boring, but you do the work, you monitor it, you watch it, because the breakouts, especially in these commodities, when these triangles, these long-term triangles break, they can do this sort of thing and go crazy. I mean,
Mm.
Nat Gas did it a couple years ago. Um, Cocoa is doing it, has done it in the past year or so. Coffee just broke out of a giant base, and which I'll show you, and bigger picture, like
Right.
weekly, monthly type base. But this is the reason why, even though it's boring and you get, it's not moving. Why are you talking about that? Well, you're tracking it because of this. And that's the key once you get in, and I got out too early, but the key is how can you stay in this thing, right? Can you stay in for as long as possible and hang on to that bucking Bronco?
Mm.
But what a move. And that's a monthly, right? This isn't a 15-minute chart. This is a monthly chart. Crazy.
It's huge. Yep.
Yep. Anyway, let's go see if we can find some candidates that have the potential for doing something like that. We'll start off with beans. So here's a daily on beans. Why I'm showing beans, we did the ABCD down into the low, which we called out, had a nice
Hmm.
push up, and then look what we just completed yesterday, and then the immediate reversal today.
Yeah.
A nice little simple ABCD down. So this is the first push. This is the first
It
correction.
held nicely. Immediate snap. Yeah.
And we got this immediate, reversal bar today. So this bears watching, because we want to see some follow through, and then the key level obviously is breaking through this full square, because if we break through the full square, we can get a higher high to go with the higher low, and then we're off to the races and beans.
Yeah.
Let's take a look at the monthly. Oh, the monthly, the reason I wanted to show you, we have an inside bar, right? We had an up bar here, and now we have an inside bar. But the key thing is just tracking the downtrend, right? And remember, this thing's been going down since June of 2022. So almost
Mhm.
2 years it's been going down. And at first we were going down in an 8x1, then it was a 4x1, then a 2x1 that held, and now we're on top of the 2x1. And that, to me, it's forming a little triangle here, is the breakout sort of formation that can get us up to this 1x1.
Yeah.
Minimum will trade up to the 1x1, right? So you can see the momentum is waning, and we're starting to get those bottom signals, forming a little triangle here. We love triangles on the higher time frames because when they break, they give you powerful moves. So it's just things are coming together for beans quicker than corn, quicker than wheat at the moment. So I wanted to highlight this one. Any comments you have on the beans chart?
Well, it's on support and snapback looks good. Let's move with it.
Yeah, let's see if we get some follow through, right? All right, let's go to the recent breakout, which gave us a lot of excitement because it's starting to move and it's got breakouts on multiple higher time frames. So here's coffee. We were tracking coffee into the low. We got a little false break here, first push up, and then we went into this consolidation for about 5 months, right?
Mm-hmm.
And this is when people lose interest and when sort of we increase our focus because we know that after the first push you're going to get some sort of correction, and then comes potentially the biggest move of the whole series comes after this. So we got this consolidation, we broke out of the triangle, tested the full square, didn't make it, and then just pushed right through.
Yeah.
Today we had an interesting bar. We were up really high and sold off, so there may have been some short-term high that we made there. But
Mhm.
again, we can pull back to here and it's still super, super duper bullish. And that would be around like 203.5. We could even come down to the full square, which is around 192, and it's still bullish, right? If we hold the half square up here around 215, that's
Mhm.
really, really bullish. So we'll see. We didn't quite make it up to the ABC, but let's look at the other time frames so you can see why this one has a lot of promise. So here's your weekly triangle formed, powerful move out of the triangle, pushed right through the full square,
Mhm.
and we're getting kind of stuck under this half square. If this last week is any indication, we want to see, can we next week get above this 220, 221 level? We can settle above that and sit on top. That opens up the full square and the highs that we saw in 22. But this is a major breakout, right? Because this is a 5-month triangle. We corrected down here, first push up, higher low, higher high. It's just the pattern is developing nicely on a bigger picture. And look at the structure too on this berry. Look at where these lows came in,
Perfect. Yeah.
right on the old highs, back in 2019, 2020.
Yep.
So that's a weekly. Let's look at the monthly now. The monthly's interesting as well because we had a big breakout out of the triangle, got above the half square. We were following this 1x1 down. Look how nicely it was following the 1x1 down on the correction.
Yeah. Mm-hmm.
Then we got above it, triangulated. So this goes back to the bean chart that I was showing you guys, right? We got over the
Yeah.
1x1, and then we formed a triangle here. Beans is forming a triangle now above the 1x1, and this is hopefully what's going to happen with beans is what's happening with coffee, where you get the big breakout. And the 1x1 is really helpful because, Gann said that defines a strong trend. And so you can see when you have these lines, you can sort of see how the bearish trend is starting to weaken. And then here's the transition where we move over to the bullish side. It's a nice visual way to see it from I guess it's a momentum standpoint in squares, right? So that's why I'm excited about coffee. This is a monthly break. We have a weekly break and the daily, of course. So I think this has a lot of potential, given that all these time frames are in sync right now, moving higher.
Mm-hmm. And you're getting
Any
close to the ABCD completion.
Yeah.
also. Just to,
Yep. Yep. On the daily we are.
Mhm.
Any other comments, any other insights you want to share with on coffee?
Well, not much other than we caught the breakout, and now it's really about staying with the trend, eh? Not to get shaken out.
And find a spot. If you're not in, find a spot to get in. You know the levels, you know where support
Yeah.
is.
Hmm.
Watch these pullbacks and you get in, and if you get in and it doesn't work out, you're getting into a bullish trend with defined risk, and that's the name of the game. Right? You're going long on a bullish trend after a breakout and a pullback, and if it doesn't work out, you've got a defined risk.
Yeah,
because you know where you're wrong.
exactly.
And that's the name of the game, really. All right, last one we want to look at is a metal, which is these things have been on fire, and we may be in a consolidation or pause phase here, where they shake the trees a little bit, and that's silver.
Mhm.
So here we are. Here's silver. Silver is one we've been watching for a long time and tracking, and it like gold, it was boring. It was, you can see basically going sideways for a year. And it was stuck in this, not even a full square. It was basically stuck in this half
Very
square
narrow.
for most of the time, really
Very
narrow.
narrow. Yep.
But we tracked the low, right? We tracked the low over here, got the first push, got a higher low, and then here's where the sort of the game changed for us, right? We pushed above the half square, and then look at this pullback. That's what you want to see, right?
Mm.
It's a textbook move, and it's shows it's very bullish, right? Because it could have pulled back all the way to here and still been bullish, but the half square held it. And then look at the move we got off that half square.
Yeah.
Now we completed an ABCD. We had some timing here. That's a pretty big reversal, right? We made the high, closed on the low. I think I have some squares on silver as well. Um, on a 4 hour, I had like a 120 by 270. So that's decent square. The daily completed this ABCD. So what are we going to watch here? Ideally, a pullback would hold right here.
Yeah. That would be textbook.
Yep. If it holds, call it 2645, we hold 2645. Super bullish.
Yeah.
Could even pull back to this little high here as well, like pull, 1/8 more, which it often does to shake people out, and it would still be bullish. It may just end up chopping around this half square too.
Hmm. Hmm.
But we'll just see. We want to see how it plays out. We see the bullish move is there. Now we're just looking, okay, where can we add to the position on pullbacks?
Hmm.
All right, let's look at the higher time frames. Let's look at the weekly. Look at that ABCD on the weekly.
Tagged it right on it.
Perfect, huh?
And the square,
And the half square.
and the full square on the other one, on the daily.
Yeah, yeah. So is it pretty good chance something ended there? Yeah. Yep. Now we want to see what comes next. Again, going sideways here above this on the weekly at like 2745 would be super bullish.
Yeah.
Super,
And a
super
very
bullish.
nice pullback.
Yeah. And pull back to here would be nice even. Right?
Even the half
Because
square.
even the half square.
Yeah.
So we just want to watch the character of that pullback. This is just it's a heads up that, hey, you don't want to be buying this, right? It's not a sell signal for any means because the market's not bearish. But when you're looking at these charts, and if you're not involved in the market and you see that, you're like, I don't want to be buying that. Completion of an ABC into a half square, your odds of success are probably not going to be super great there. And your risk reward is going to be off balance. So anyway, I thought that was interesting to look at, is that we, on a weekly basis, it sure looks like we completed something. Let's look at the monthly. And completed, again, I don't want to confuse people. It doesn't mean the move is the bull run is over. It just means this leg is probably over. On the monthly, we're in this big triangle, had to push out, pushed above the full square, which was key. And so now the full square coming back is really important, around 2665 on pullbacks. We can hold on top of that. Super duper bullish. And as Barry always likes to point out too, you always look at the apex of the triangles. They can pull back to the apex and it can also be very bullish. And that would be at around 24 and a quarter. Pull back to here, holds here, and then it goes again. So I think this looks really good. Longer term targets are, upper 30s to upper 40s in silver, bigger picture. Anything else to add on silver?
Silver is just getting started, so let's see. I think the counter trends would be the thing to watch for now.
Absolutely.
Just like with gold, same story.
Same exact story. And I mean, that's it for me on the commodity side, because as I said, most of the others are either correcting or, we need to see some movements and some breakouts of out of sideways movements. Like nat gas has been going sideways, wheat's been going sideways, corn's been going sideways, sugar is still correcting. So that's it on the commodity side. The question I have for you today, Barry, that we should discuss. When you make that transition over, like we've been talking about, okay, how do we map into a corner? What do we do at a corner? Once you make that transition, what's the most important thing psychologically that you have to do to make sure that you make that flip?
Well, most important, let's see.
And the reason I'm asking that is because the psychology that you approach a market with is so important to your success. Right. And you always talk about, we got to be open, right? You got to be open to any possibilities. You can't have a bias that's going to, blind you to information that's counter to your bias. So what's the most important thing when you make that flip psychologically, when you make that switch in your mind? Okay, this market, for example, ES, right? We're now looking to sell rallies into resistance, whereas for the last 5-6 months, it's all been, find dips into support to buy. So what's the most important thing so you don't get stuck or approach the market the wrong way once that change occurs?
Well, it's twofold. One is that I tend to really stick with the technicals and not try to come to some kind of a decision as if I know, you know what I mean? Because I don't know the future, but I do know the market patterns and I know how they unfold. I know the behavior after a square that, and that tells you certain things. So I kind of I really lean into the system and I watch the levels and I watch the patterns to tell me, see if I should stay engaged or not, because sometimes the trend might change and it just might be a deeper correction. It might not be actually a big high. So you have to be flexible in the timing of things, even though you might, I've seen cases where you have a, really good square, everything's in place and you think you want to buy this thing and, it might go up a little bit, mess around, go sideways, maybe take another dip, and then all of a sudden you get another lower. So it's markets are always keeping you on your toes. So I think the biggest thing is once the technicals show you that there's a potential corner, and then you look for the next signals to get you onto the long or short side, let's say long side. And then you want to continue to trade that till you get some kind of a yellow light on the other side, sort of like how the S&Ps came down to 5162, which was a major support level. Okay, now this is really critical. Here you can take some profits, take a breather, regroup, and then you can try to see, how to get re-enter or add positions. Whatever you have to do, it happens at key levels, just like we were doing to the long side.
Yeah.
So for me, I think just really for me, I'm not sure if it applies to everyone, but what helps me to keep that little buffer between my mind and the market, not to get too involved, not to get personal, but just to stay with the technicals. And so my relationship is really not with the market, it's really with my technical toolbox. And long as that relationship is okay and I can trust what I'm seeing and what the technicals are telling me, I tend to go with that, and the markets can do whatever it wants to do. And I know the sort of the structure that we have around it, like frame that we have around it, just like you got your ping pong stuff going, right, with the squares. So just like that, once you have that framework, you just work within it and you don't have to get sort of involved with the nitty gritty of what what any market is doing. You just have to use the tools and
what I'm hearing, which I think
keep that distance, right?
I want to paraphrase and you correct me if I'm wrong, but I think this is really powerful. What you're saying is you don't get caught up in the bullish or bearish moniker, right? You don't get caught up in saying, "Oh, I'm bullish this market or I'm bearish this market." You zero in on the price action, the technicals, and the levels, and based on the information you get from that, you'll trade bullish or bearish. But you're not going to say, "Well, I'm bullish on this market or I'm bearish on this market at these big turning points," because that can get you screwed up if you get stuck in that.
Absolutely, man. Absolutely. And you know, the funny thing is, if you think about it a little bit, you don't really get paid for taking a position like that. Like, I'm bullish. Like, who pays you to say that? You
Right.
know what I mean? Like, there's
Right.
no, but
There's no
but
glory in that.
there's no glory, but we love doing it for some
Yeah.
reason. So, but you have to, I mean, if you're going to trade for a living, you really have to come to some conclusions. And one of them is it really doesn't pay to have a position or to talk about it or brag about it or, you know, banging your gong. What you really want to do is to see if you can trade it and make a profit. So I think, yeah. And in order to do that, you can't really have that other kind of a relationship where you're tied to the market's ups and downs and you made some kind of a commitment, you made some kind of a decision that it's not a
So your
marriage.
ego's involved, right?
Egos involved, everything's involved. So I think less you do that. I mean, that's what when I talk about a buffer, that's the buffer you need for your, between your mental activity and the market.
Mhm.
But instead of having any relationship there, you have the relationship with your tool set, how you frame the sort of the all the different markets. So once you have that, then you're not really caught up in the, in day to day or even week to week, what's happening with the market and what's your position, like what do you think? I mean, really, like, does it really matter? I mean, it to me, you know what I mean? It really
Yeah.
doesn't, and we rarely talk about it like that. We rarely say, we're bullish, and that's how we're going to stay till God knows when. No, we're very flexible. We look for things. If it's moving, if it goes beyond something, we call it out and then we change. You just have to roll with it, kind of like sailing, really. It's like,
Right. So rather than say, "Oh, I'm bearish," if you see lower lows and lower highs, you take a bearish position.
sure, yeah. What else are you going to
Or
do,
if you
right?
see levels being violated, support levels being violated, you take a bearish position.
Well, and we don't want to forget that larger picture is, we know the markets move in waves.
Mhm.
We know that. We know markets go up and down. Now once we know that basic, seems like such a simple thing, and you think like everybody should be able to like be in on this. The next thing is, well, how do we know when these things start and stop? And because they're all size waves, all size cycles, they contract, they expand.
Mhm.
So that's when you have to really get down into your tool set. And all we're doing is really another subset of that larger thing, right? Larger understanding of it moves in waves. Okay, great. It moves in certain legs and swings. Well, now we're just trying to trade one of those at a time. We can't trade a bunch of them. In one market only has one direction, right? At one time.
Mhm.
So
Mhm.
it's just about isolating that and having the tools to do that. And then the rest is just trend trading, which everybody can do. The problem is we get kicked out of trends because we panic and we get out too early, we get out too
Right.
late, all the
Right.
things in between, because we have this mental thing with, oh, I'm bullish, so I can't stay on this trade too long, or I'm bearish.
Right. So I can't stay long here because I'm bearish and you don't see when you do that, you sort of create a barrier between you and the actual signals that you can receive, right? You start filtering out looking for, well, if I'm bearish, I'm going to look for bearish signal.
Yeah,
And you miss the bullish signal.
exactly. Like they say, like, almost it's not the exact same relationship, but when they say, like, if you only have a hammer, everything looks like a nail. So if you
That's right. That's
right,
a
so if
good one.
you're
Yeah.
only bullish, that's all you're going to see.
You're
and
only going to see bullish signals.
and then and if they don't work out, that's when you suffer, right? You take a hit, you take a beating, because, oh, it looks bullish, I'm bullish, why is it going down, I'm bullish. Well, nobody cares if you're bullish or bearish.
Right.
Markets don't care. Markets are just
Price is
moving.
price.
Price is
And
price.
listen,
So
I personally suffered from that when I first started, right? You have this bias and you just miss when your bias is so strong, you
mm,
miss information that is counter to it. You just you see it and dismiss it, or you don't even see it, which is even worse.
I think, part of it's probably how we learn to trade and what authors say, and if we get online, what people talk about, and
Mhm.
it's really about how we learn. We learn, oh, you have to make a decision. Like, okay, so what's the decision? It's really not about if a market is bullish or bearish. The decision is really about what position are you going to take,
And what's your risk reward?
yeah, and in order to do that, you need a tool set and a methodology that you can trust that's consistent, right? That's consistent because our mind, we talked about this a couple of few weeks ago about how mentally we can't be consistent that regularly, especially if you're trading short term. You can't, it's very difficult to be consistent in your approach. And that's why tools help. Tools can always be consistent because like these squares, they don't change.
No,
No breakfast, no lunch, no problem. Square is still holding
right?
exactly where it's supposed to be. So I think it's a simple question, but I think the answer is sort of complex because of the mind and how we tend to identify with what we believe, and then we can't let it go. And so we definitely don't want to get into that path. Then it's just it's you can't win that. It's very difficult.
So and let me just summarize and then we'll wrap up. So
Mhm.
you, as I said before, you don't get caught up in the monikers. You get caught up in the technicals and the fundamentals of the structure of the market and the geometry and the squares and the things that are stable because our minds are unstable, right? Our minds change all the time because feelings come and feelings go and thoughts come and thoughts go. But as you said, the price of the square is the price of the square.
And people whisper in your ear, all kinds of distractions, right?
Headlines, right? Headlines
Headlines,
and
everything.
tips and all this
Mm,
sort of stuff. And so your mind can change in a moment. Whereas so it's almost like you're trying to build a house on sand as opposed to a concrete structure, right?
exactly.
That's not going to change and not going to shift.
Yeah, and that's what a good technical system should give you, that foundation that you can rely on, and the odds are in your favor. See, that way, always comes back to that. If the odds are in your favor, there shouldn't be any fear. And if there's no fear, then you can take every signal that you get, the system produces.
Right.
And if that is working in a healthy relationship, if there's a healthy relationship between you and your tool set and your approach to risk reward, then everything's okay. You can just trade, and that's just trading. That's just your work. If you step out of that into, getting identified with your beliefs and what you think, and
Have to be right.
you have to be right, then the whole thing's dysfunctional. Then it's like a bad relationship, and it just then you pay a price for that.
A
So
big one. Yep.
mhm,
The tuition is high if you choose that route. So
very high.
to summarize, don't choose that route.
Yeah, I mean, I think these days it's easy to put together. I mean, let's say, okay, you don't have to even pick a corner. Let's say it's easy to pick some tools to trade a trend. It's really easy. So that's all you really need. The part is then if you don't know anything else, but only you can trade the trend, then you have to wait till the corner is confirmed. So you might get a little piece of the action, maybe not. That's all it does. If you just wait for that, trendiest part of a move, then you might be giving up a little bit at each end, but at least you're catching something with higher probabilities,
Sure.
right? It makes
Absolutely.
sense. Yeah. Yeah.
Completely makes sense. And I'm glad we talked about it. That's going to be it for the show. That's going to be a wrap. Barry, thank you for your review. Really good coverage. I think you and I together have been nailing these turns and trying to help people make that adjustment and make that transition. And it
Mhm.
really appears that we are, in a transition with the cycles that we called out and other things that, the geometry. So it's exciting for me to help other people understand and not be the bag holders, right? Because
Right.
when I
Yeah.
started out, I was a bag holder and it's not
Mhm.
fun and it's
Mhm.
really damaging to your mind and your health and your psychology. So if you can avoid that and learn not to do that, you're really far ahead of the game. So it's
Mhm.
part of the reason why we put this stuff out there and we hope it helps everybody. So everybody have a great week. Barry, have a terrific week and we'll talk to you soon.
Thanks, Ben. Good job. We'll talk to you later.
Take care.
Ciao.
Bye.